Hey guys, Mike here. So hope everybody had a great day in the market today. Obviously got some red, definitely volatile day. And in this video, I'm actually going to do it a little differently. I'm going to play some catch up here on different sectors, different things that we hadn't had a chance to talk about. Also show you what I think is the chart of the year. I can't even, I don't know, I'm trying to rack my brain to think of a chart like this that I've ever seen before. But when I say everything is going up, like this chart, it just stands out. So if you got one that can beat it, I want to hear about it in the comments, and I'll look it up and see it for myself. Also, I'm going to look at the S&P Qs closely, along with the VIX, bond market, and also we're going to answer a question about somebody had about Tesla and why it didn't explode a couple of days ago when there was a big announcement and stuff, and I'll show you why on that. But also put your questions in the comments for Saturday's video. I'll get started on those, whether it's stock charts, whatever. Just let me know. Now let's play catch up here real quick, because I've been saving this up. Let's get into the real estate market. First of all, financing has fallen off a cliff. You'll think it'd be the opposite, because you say, oh, when the Fed cuts, we're gonna get a big spike, and we did get a big spike at first, and then of course it fell off a cliff, and rates really hadn't moved that much since they cut. Roughly 1 in 7 U.S. home purchases get canceled. This just came out recently for August. And again, it's up. I mean, it's been ticking up in the last few years. But I guess what? I'll guarantee you don't know the number one reason. I'll bet money what you think it is got to do with either financing or mortgage rates or something like that. But surprisingly, it really hasn't changed over a number of years here. It is still home inspection or repair issues, 70%. Buyer financing fell through, that is 28%, but look at high mortgage rates. Down at the very bottom at 6.5. And so I found that pretty interesting. So still, has the real estate market changed much? Has it been able to get fixed with this first rate cut? Maybe we get a couple more. We'll see where it moves to, but at this point in time, people who are in their homes under those 4% mortgages are staying, and a lot of people still can't qualify for the other ones anyway, so that's where we're at. Now, retail still dominating here. Made the largest purchase, over $100 billion in stock last month, and you can just see it. And I'll say this: I'm not surprised to see it. To be honest with you, I'm actually surprised it took this long in a way. But at this point in time, if you still call yourself dumb money, I guess you deserve to be dumb money. And there's still dumb money out there. Trust me, I know people that are dumb money. But calling all retail dumb money is ridiculous, because prior to 2020, sure, you can say we're all dumb money. But after 2020, there's no reason for anybody to be dumb money, because there's too many free resources out there. I mean, you're watching this channel for a reason. You watch other channels. You have all this data, right? That these sites, collect flows and what's going on, and dark pools and all this crazy mess. And so at this point in time, I'm not surprised at all that retail caught the April dip. I'm not surprised at all, that we basically been able to ride a lot of this up and enjoy it, because we've been educated. We're way more educated than we were. Sure, do we have all the data that Wall Street has? Not all of it, but a whole bunch of it, because a lot of people over the last 5 years have left Wall Street to start their own YouTube channels, to start their own investment sites, everything. I mean, it's a crazy thing how this works. But you got money managers that said, forget managing these rich people's money. I can make more money doing something else, like educating the public and selling like calls on when I'm going in a stock, or alerts on when I'm trading, and all this crazy mess. So there's just too much stuff out there for people to be dumb money anymore. And so again, I know it's like, oh, the top's got to be in soon. Who knows? We'll find out. But I just don't believe. For me, sure, trust me when I tell you this. I know there's plenty of retail investors who literally don't educate themselves. They literally will buy blindly if somebody tells them to buy blindly. Excuse me. I get that. But if you're watching this channel or watching other channels, and you're really into your thing, you're not dumb money anymore. That's just the way it is. I don't know. Let me know in the comments. Maybe I'm by myself on that, but I can give a 20-minute speech on that, by the way. But no, I mean, not at all. There's too much information at our fingertips right now to make educated decisions. Okay. Now, chart of the year here. I mean, remember, this is a weekly chart. XME is the S&P Metals and Mining ETF. Count with me here, folks. You ready for this? That was the bottom. That's 3 weeks, 4 weeks, 5 weeks green, 6 weeks green, 7 weeks green, 8 weeks, 9 weeks, 10 weeks, 11, 12, 13, 14, 15, 16 green weeks in a row. One red one. Ready? 17, 18, 19, 20, 21, 22, 23, 24, 25, 26. So I think it's 26 out of the last 27 weeks have been green. Can you find a chart like that? I looked on the SPY, I looked on the Qs, and if you can, let me know which one it is because I want to see it. I mean, whether it's an individual chart, but that's a weekly chart. You'll see that on daily charts. That is a weekly chart, okay? That's when you're going, whoa, when I look back on that chart all the way back to its existence, not even close. Nowhere anything like it, okay? So when I say you got everything going up, including all of this, right? We know, gold and everything else, silver, blah, blah, blah. Then setting it, but get that many, 26 out of 27 weeks? Woo, boy. I don't, but I can't wait to see the chart you put in the comments because I want to look them up and I'll show them to everybody. I mean, that's an amazing thing to see. Obviously, you got to think to yourself, got to be some red coming at some point in time. Anyway, now I know people get tired of hearing me say this, but I've said it every year. And so far I've been proven right and it will continue to get worse. But as the concentration in the stock market, now you have the top 3 stocks accounting for 20% of the S&P. 1/5. And our friend Charlie Baleo here, give him a follow. Gives a lot of great charts. You can see it right there. 21.4% for Nvidia, Microsoft, and Apple. And just look at the last 3 years. Oh, and you go back to any time, this goes back to 1980. They pull up the top 3 stocks. I mean, it's not even close. 10% there, 10% there, about 12% the max. That one even going through 08 crash. 10% for the top 3, even though Microsoft, look at that, back in the dot-com bubble was in that one too. Yeah, but I mean, just look at that. Holy moly. Which, of course, the reason why that can be a good thing and bad thing, it cuts both ways, I did a whole members video on this, is the fact that now that passive income has completely, I say this, passed or surpassed active investing, okay, which means basically it's like people doing their 401ks, pensions, everything, they get these passive funds, and the money just flows in, right? And it's like this. This is the kind of investing it is. What's the price? Don't matter. They can't even see. It doesn't matter. It doesn't matter what the price is. They just buy and buy and buy. And that's great as long as there's a net inflow coming in. Okay? The majority of money goes to these top 7, 8 stocks, especially these top 3, okay? But what happens is, and what people are wondering what's going to happen over the next 5, 10 years, and one of you guys asked this in a Saturday video months ago, was what's going to happen when all these baby boomers retire. They're already starting, right? And up to 2030, it's supposed to be just millions of them, okay? And they're going to do what most people do. They stop working, which means they're not putting any more in. They're going to start taking out, okay? And they have the most, by far, amount of investments than anybody else, okay? So they will be a net outflow. And in that video, I remember saying what was supposed to happen, though, was the younger generation was supposed to be the inflows, right, to kind of offset all that. Well, now you're seeing what's happening with the younger generation. 7% unemployment for male college grads right now. AI is coming online. All these very high-paying jobs, all of a sudden, they're getting pink slips. And so you're going, huh? And I've showed you all the AI kings, the billionaires, everybody who are all into this stuff telling you. They're like, this is going to be the white-collar, layoff scene here. Remember when we did automation for blue collars in the factories? I know people who got axed on that. They already saw what's going to happen to white collar coming up soon. So that means less inflows from these younger generations from 18 to 40, whatever it is, to offset those outflows. So what's going to happen? I can't predict it. I don't know because there's many ways to manipulate the stock market with liquidity and things like that. But that's what we got to find out. So everything's good when you just this concentrate as long as it is net inflows. If it ever turns to net outflows, whoo, doggy, watch out. Okay, that's what we got to figure out. We got to wait and see. That's what we got to wait and find out. So is it a good thing? It is when you're going up, but it's bad if it turns to those net outflows. So watch out for that. Bond market here still looking good. Here's your junk bonds. Again, we've been riding this trend line. We had that tariff crisis right there. Got right back above this trend line. Been riding it up ever since. So we're just going to watch and see if this trend line breaks right now. And high yield is your junk bonds, right? So companies are able to raise money. So companies are able to raise money and all that good stuff. And you can see normally at the top, there's like a rounding top on this thing. Over the last few times here where you got, a decent dip in. And if I threw the S&P up over this, it will be a nice drop. Okay, so just kind of keep that in mind. Right now, we don't have that, so that's not a problem. Then you look at the spreads. Obviously, they're super tight. That's good for the stock market, believe it or not. As I showed you, we got to learn in April. When they shoot up, not good. When they're coming down and getting tight, Everything seems to be good. You can do the S&P over this if you want to, play around with it, and you can see the percentage gains. All right, and it seems like for whatever reason, the tighter they get, the more the market goes up. Right now, there is no stress in the bond market at this point in time. Now, that leads us to the Qs. What did we talk about yesterday? We said right here, this formation, these imbalances, one of my favorite setups. Let's see what happens if we come down. If we respect it, we should bounce. That's exactly what happened. 0.5 fib just happened to line up with that trend line, with these imbalances right here. Boom, that's where we got the pop. Now, we did get back to the trend line right here, and that's where we got stalled, okay? So when I'm looking at this, like I said, I'm one of these guys, I take it level by level. I don't do this fear-mongering crap on my channel, and I don't do it in real life, okay? If this area down here, that box holds, that's a good thing. That's bullish, okay? If we close below it, that's not good, okay? Now, does that mean we're going way down? Absolutely not. Absolutely not. But we would be breaking that trend line for the first time in quite a while, all right? Closing below that imbalance. And, of course, you know, you look at the SPX. Prime example of this. What's it doing? It's ranging. So it's doing the opposite of what the Qs are doing right now. It's just ranging. It had that one little pop out of it. For the most part, it's in this range. All right, we got this trend line down below. Again, it's about a 0.96% range if you count that part of it. And so it's setting up for its next move. Whether that's going to be down or up, we're going to have to find out. And we'll talk about why in just a second. But we'll draw this trend line up right here. Again, I wait for trend lines to break. I wait for support, resistance to break, all that fun stuff. Instead of trying to say, well, this might happen if so-and-so comes on TV and says this. It's like, whatever. Look, there's a reason why, as I was telling members, you saw VIX calls coming in, okay? The VIX has just been, you can call it, you know, consolidating, compressing, whatever word you want to use. But, you know, it's about 786,000 calls. It's hedging. And why are they hedging? Okay? Because October is notorious for being volatile. And you can see it right here. This was last year. Boom. Second half, I mean. Over the last couple of years, that's what we've had. Good first half, bad second half. It was 2023. Okay, this is 2022 where we're coming at the bottom of a crash, we bottom, and you're sitting here like an 8% range right here. Look at this mess. Now it is the bottom of a crash, so we'll go ahead and scratch that one off. This is 2021. What happened? We sold off at the beginning of October and had a great second half of October. Okay, and again, not massive amounts, not mad, but you see the run up because again, you're setting up November, which is the best month of the year, right? 2021, same thing happened. Great first half of October, boom, second half, sell down. So, what to really watch out for? Watch out for the levels I showed you. Here's your 9 EMA right here, which is riding up. Your 50 is still not been tested. That's only 3% down, folks. And there's your 20-week. Look at that. It's only 5% down. That's it. That's it. And again, if you get it, it's a gift because hopefully you have your list of stocks you'd like to buy at certain levels. And if you don't get it, you just do what everybody else is doing, including me. You just keep looking at your portfolio going, that's a new all-time high. That's great. Okay? That's how you work it. All right? Now, if you break the 20-week, especially with some volume, well, that's the problem. But we ain't even nowhere near that stuff. So, again, there's nothing out there right now that would suggest that we're just in a volatile month. So we'll see if those hedges are going to pay off people or not, okay? Now, I got this question about Tesla, okay? And I meant to answer this yesterday, and I apologize. And this is when we got the announcement, XAI, NVIDIA is going to be putting a boatload of money, about $2 billion, investing in Elon Musk's XAI. And they said, wait a minute, I don't understand this. Why didn't it pop? Well, it didn't pop because it's not a part of Tesla. That's why. Musk says he did not support a merger between Tesla and XAI, and this was just in July, I believe. So that's why you didn't get the pop like you did when you saw NVIDIA invest in all these other companies, and all of them got these huge, you know, I think it was SoundHound and whatever else, companies, whatever. And then, of course, you know, AMD's getting an investment, blah, blah, they're AI pumping, right? But that company is not under Tesla and most likely will never be under Tesla. I think it's Gronk, if I'm not mistaken, when I read, like that is the company that created Gronk. And of course, they use that to put into the Tesla vehicles. They're going to use it to put in to Optimus, as a matter of fact. Tesla works with this company. So, you know, but again, that investment is not going to affect Tesla. Tesla's not getting any of that. So that's why Tesla didn't move at all. Because I saw people, when I saw that come on Twitter, I saw people, oh, Tesla's going to the moon now. I was like, no, not going to happen. Remember, Elon has like, I think it's 7 private companies, I believe it is, if I'm not mistaken. Might be 5 private companies and then Tesla. What else he got? Yeah, no, I think it is 7 private companies. Yeah, I believe it is 7. So he has plenty of private companies, but they got nothing to do with Tesla. So that's just the way it is. But hopefully that answers your question on that one. Again, please put your questions down in the comments for Saturday's video. I definitely want to see the chart. If you can beat that 26 out of 27 weeks green right there on that chart, I want to see it for sure and make note of it. And I think that's all I got for you today. So hope everybody has a great weekend, because I'll end up seeing you Saturday. Hope you have a great Friday first, then a great weekend. And so I end up seeing you Saturday. Please hit that like and subscribe button on the way out. Thank you for watching. Think about signing for the membership. Less McDonald's combo at $7.99. Just hit the first link down the bottom. That is everything you get with it. And I'll see you guys on Saturday.